think it's huge. I think it really is a big deal, and it also comes down to understanding kind of investor behavior and workflows, which is why we're so bullish on ETH.
How are you moving on? We'll come back to Bitcoin in a bit, but how are you thinking now about the ETH staking yield? I think you and I have talked about this in the past. I think now we've got liquid staking. We've got a liquid money market curve out to a year. I think people don't understand how big a deal this probably is.
I think it's huge. I think it really is a big deal, and it also comes down to understanding kind of investor behavior and workflows, which is why we're so bullish on ETH. Because if you think about it, there's 4 reasons to hold ETH, right? One is you're holding it on an exchange as collateral for trading futures or options, right? If you're doing that, you're probably, the staking rate isn't going to affect you all that much because you're using that ETH as a productive asset and you need to continue to use it. Number 2 is you're utilizing it in DeFi applications, again, as collateral, so that's not going to affect too much. 3 is you're keeping it in a wallet just to be used for gas. That's not going to change, right? So the first 3 usages of ETH are not going to change at all because of staking. But the 4th one does change, and that's anybody who holds it passively as an investment, and that includes funds, that includes individuals. Historically, you've earned 0 on that ETH, and now you can earn somewhere between 4 and 7%, depending on the participation of stakers and how that fluctuates. That basically means that you know the rule of thumb as an asset manager. It's never earn nothing when you can earn something, right? Notwithstanding the risks of who you're staking through and any of the operational risks, but if you can earn something versus earn nothing, you generally try to earn something, right? That's half the entire financial industry is just built on that float concept right there, which is if I can delay payment for even 12 hours, I can earn some yield on that 12 hours. So the right thing to do is not compare ETH staking rates to treasuries because that's not relevant, right? It's not like people are going to take their money out of treasuries to own a volatile asset like ETH just to earn the yield. But you need to compare it to the passive yield of earning nothing versus earning something. And that basically means that if you look at other proof of stake networks, most of them are 50 to 70% staked right now, whereas ETH is about 15%. I think that rises to 50, 60% over the course of the next couple of years. And when you couple that with what you're saying about the curve and having an actual, whether it's through structured products or just through, duration mismatches, this is going to basically be the risk-free rate in crypto. That's how people are going to think about it.
Yeah, and I think everything can be benchmarked against it. Which helps everybody tremendously because everyone before with, Celsius and everything else, they didn't understand the difference in yields. So this can be, it can be ETH plus as how we price yields, which I think gets really interesting.
Yeah, and 100%. And even though the lending market is a shell of what it was, post the events of last year from Celsius to BlockFi to FTX and Genesis, centralized lending is largely dead right now. But decentralized lending, on Compound and Aave and Maker is still flourishing. And when you bring to it now this component of a yield curve where it's like, well, what is the difference in a rate between borrowing for 3 months versus 9 months versus 18 months? And is there going to be a curve built in there? And can you do a little, quasi net interest margin banking with duration mismatches? It's going to get really interesting. And there's a lot of companies and projects out there that are trying to take advantage of it. And again, you look back 2-3 years ago at, DeFi was barely off the ground. Stablecoins were barely off the ground. NFTs were barely off the ground. And now those are a staple of what we think about in terms of, the growing industries within digital assets. Structured products and rate arbitrage and curves might be where we are 2-3 years from now. I mean, this might be a full-fledged financial market in 2 or 3 years.
Well, having been, I grew up in the derivative market, and I look at this and you see an asset that people want to own, and you see it has a yield, and the volatility is pretty much at its low. So you get the ability to take the yield and buy options. And so you can create guaranteed products or defined risk products or enhanced return products, which was the explosion in the European derivative markets and the Asian derivative markets in the 90s onwards. And I kind of rode part of that wave. And I look at it now and I'm like, in 3 years' time or 2 years' time or 1 year's time, we'll see a ton of these things, 80% guaranteed funds, 90% guaranteed funds, or accelerator funds, all of that stuff.
Yeah, I mean, I was one of the earlier traders of credit default swaps back in 05, 06, 07, 08, and it was the same thing. It was like people didn't really understand them at first. It was a very kind of niche one-off thing, and then by 08, 09, it was like everybody was trading them, and everyone understood how to price the curve and how to think about the different derivative instruments. So it's the same thing. Like, again, I don't know if it's 6 months away or 6 years away, but there's no question that there's real time money and investor interest in coming up with these different structured products and derivatives around ETH interest rates.
Yeah, I mean, I've had lots of people write to me saying, ex-head of vol trading at Goldman writes to me and is like, oh, we're setting up a shop, we're going to do some of this stuff. There's a lot of activity of people who are seeing it because they've seen it before, and they're like, oh yeah, I can make some real margins, some real stuff. So it's fascinating. To go on back to Bitcoin, there's another change that's happened, which is ordinals. How are you thinking through that? I mean, the Bitcoin community was completely split by, what? You're using it not for ultrasound money where, it's the hallowed ground, and now people are trading JPEGs on it.
Yeah, I mean, so we have a full team here dedicated to NFTs, and these guys are incredibly smart, and even they don't fully understand and grasp everything that's going on with Bitcoin ordinals yet, just because it's so new. But from my standpoint, more at a higher level, just thinking about markets, thinking about finance. One, it's just amazing, right? Here's this asset that's been around for 11 years. It's basically been defined by the fact that there's literally nothing to do. It's just a pet rock. It's just this asset that is a, bearer asset that is potential protection against, sovereign and banking craziness one day. And all of a sudden, out of nowhere, here come these NFTs and inscriptions. And I was like, that's amazing that an asset that's 11 years old that basically did nothing new or innovative for the entire time is all of a sudden, this just happens and it becomes a real market. So from that standpoint, to me, it just opens up the creativity again of just how many times this industry has just evolved. If even Bitcoin can still evolve, it's fascinating. Now, I don't know. I certainly don't have I have no issues with Bitcoin having other use cases. I know some of the people in the Bitcoin community are up in arms saying this is not what Bitcoin was meant for. For me, I'm just looking at purely from a creative standpoint. I'm thinking this is awesome. Anytime you can introduce a new variable to something, it increases the value and increases the use cases. So I personally have not, I was certainly understood and was involved personally as well as through our Arca funds in Ethereum NFTs and through Solana NFTs. I have not touched the Bitcoin NFTs yet because it's a little too complex for me and I don't quite understand it yet. But I'm fascinated by it.
I'm too much of a boomer to try and navigate that. So everyone says it's quite difficult, so I'm like, I'll leave it to somebody else.
Yeah, let it get easier and a little more straightforward before I use it. But I think it's incredible, and I'm excited to see. And also, just little things can snowball too, right? Just the amount of Bitcoin transactions that are happening as a result of this. Even though it's a little bit of a flash in the pan, when you see it, it does increase interest in Bitcoin. It increases developing power in Bitcoin. And so it's like, you see how a little thing like this can then snowball into something much bigger as well, which is also why we're all here, right? We want to see the creativity and the masterminds of developers and how they think about how to use these technologies.
So what other layer ones are you interested in? Solana's been a great story from it's completely dead to, one of the best performing assets this year. But what's on your radar screen? What are you looking at that's interesting?
For sure. But before I answer that, I want to go one more thing popped in my head on the Bitcoin ordinals is what I'm really interested in is take a dollar bill, for instance, right? Dollar bills have serial numbers on them, but you never think about that, right? You're never like, oh, that one with the 5 zeros on it is more valuable than the one with the 3 6s. You just assume that a dollar is worth a dollar. I am fascinated with what happens with Bitcoin ordinals in the sense that if some of the lowest denomination of a Bitcoin is a Satoshi, if some Satoshis have basically an NFT on them through the ordinals and others don't, are you going to start to get into a point where it's like, I'm going to trade you one Bitcoin for one Bitcoin, but I actually think that Bitcoin's more valuable than this one because of what's on there? Almost like an old Spanish coin that you find in a treasure chest. Like I'm not sure where that heads, but I think that's fascinating as well. And I think from that standpoint, I do understand why there are some in the Bitcoin community who don't like this. Because if you want to think of Bitcoin as this truly fungible asset, and now all of a sudden maybe there's that hint of something being more valuable than others, it could get really, really, really interesting.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.